Hello friends, a very warm welcome to my channel. In this video, we are going to analyze another interesting company, which is Time Technoplast, that belongs to the small cap sector again. So this company has been in the limelight recently and the stock has also given quite a bit of a rally. By this video, we will try to judge whether there is further scope of growth left in the company and what are the future prospects of this company from an investment point of view. If you're new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos which I upload. And if you are not a part of a Telegram channel, do join today by clicking the link in the description button so that you join the right Telegram channel. Every day morning before the market opens, I share my views on the market and also some strategies which explain how you should be managing your portfolio, and these will definitely help you increase the returns of your portfolio. So let's begin the analysis of Time Technoplast. This will be the flow of our discussion. We'll start with discussing the business model of the company in brief. We'll look at the chart of the last few years. We'll understand the basic financial performance of the company in the last 5 years. We'll talk about why the stock has given the recent rally. We'll understand the outlook of the management for the next 2-3 years. We'll analyze the valuations of the company and understand the risks of investing in this business, and then form a view after understanding all these factors. So Time Technoplast is a multinational company. They manufacture polymer based products. It is a technology oriented company which has been the pioneer in introducing several products for the first time in India which belong to their product range. They have business in India as well as in the Asian and MENA regions. They have more than 14 brands in their portfolio, more than 900 customers, and few of the marquee customers which I would like to mention are BASF, Bayer, DuPont, L&T. So by looking at the names, you will understand the service quality and the product quality of this company, as such big companies are their customers. As it is a research driven company, they have an R&D team of 30 people working with them. So these are some of the products which the company develops. So they have drums and containers, jerry cans. So all these are used to carry liquids. Then they have pail packaging, HDPE pipes. They are also into auto components. So these names which I have discussed, these are the traditional or well established products of this company from a very long time. Recently, the company started focusing more on the value added products. So these value added products have lesser competition and higher margin, as Time Technoplast is one of the first ones to venture into these kind of products. So when it comes to the value added products, they have composite IBCs, then they have composite cylinders for carrying various gases like LPG, CNG and oxygen, and recently they have also got an approval for cylinders for hydrogen gas also. Then in this we also include the MOX films. If you look at the bifurcation in the revenue, the polymer products constitute about 65% of the revenue still of the company, and the composite product constitute about 35%. So the composite products are the area where majority of the value added products come. Now when you look at the stock performance, it was consolidating in a range for a very long time for the last 5-10 years, and there was a rally before COVID which cooled off before COVID itself, and the stock made a new low during the COVID times. But then things changed for this company as the management started focusing more on growth. Prior to COVID, there was not much growth. If you look at the last 10 years, the sales were more or less stagnant. So post COVID, there was growth in the company. The company started focusing more on the value added products. They launched the composite cylinders which have good amount of market size. So these triggers led to this fresh rally which you see from the COVID lows, and the stock made a fresh high recently of somewhere around 350 rupees. Now when you look at the revenue performance, in 2020 the company did a turnover of somewhere around 3,500 crores, which dipped a bit to 3,000 crores in FY21, which was the COVID year, and bounced back to 3,600 crores in FY22. And recently in FY24, the company did a turnover of somewhere around 5,000 crores. In terms of EBITDA, you will notice a similar pattern. They did about 500 crores of EBITDA in FY20, which dipped to about 370 crores. And in FY24, as the margins are more or less same, they did an EBITDA of about 690 crores. Margins are more or less same in the last 5-10 years. So the company is able to pass on the increase in the raw material cost to their customers, which shows the pricing power of the company and the strength of the business model, and that's why the margins are stable. ROE is slightly on the lower side of somewhere around 13%, and it's a face value 1 share. The company further has scope to efficiently manage their working capital as their inventory days are more than 100. Now what led to the recent rally which we saw in the chart? The sales growth was consistent in the last 3-4 years, and the margins were stable, which led to the expansion in the growth and profits. The re-rating of the stock happened as earlier it was trading at a very low multiple of somewhere around 10 times, as there was not much growth in the company. But the recent growth of the last 3-4 years led to the re-rating in the stock, and the multiple the stock which is getting now is somewhere around 25 times. So twice the jump in the price is just because of the multiple itself. Along with this, the performance improved. Now, what is the growth outlook of the management going forward in FY25 and FY26? So in the year gone by, the established products, which are the polymer products, the traditional products of the company, constitute about 74% of the share of the total revenue and 26% from the value-added products. Going forward, the company expects that the value-added products will go up to 30-35% in the coming 1 to 2 years. The order book of the PE pipes, which is into the traditional or the established products category, is about 125 crores, and the order book of composite cylinders is about 175 crores. ROCE, which is slightly less now, the company focuses on increasing this to about 20% in the next 2 years, and the company is trying to sell their non-core assets and reduce the debt. With this, they would get a amount of about 125 crores, and they will further focus on capacity utilization increase so that the fixed cost remains the same and the margins slightly expand. The company has started working on a new product, which is TBS batteries, which are used in the power sector. And now, as you know, the power sector has become a sunrise sector because of the increase in demand within India. So if they are able to develop good product in this sector, the tailwinds for this product will be very high. They are also working on another new product, which is the lead acid batteries for the e-rickshaw. So indirectly, they are also into the electric vehicles. This company becomes the first one to receive an approval for manufacturing of composite cylinders for hydrogen gas. Now, how much demand will come for this particular product going forward, we have to see, because as of now, they have just received an approval and their manufacturing will begin in a few months from now. The company plans to disinvest about 50% of their stake in their Middle East business so that they use this to further expand their Indian business and reduce their debt. So, selling of the non-core assets and decreasing the stake in the Middle East business, by doing this, they are generating funds to reduce capital and also to distribute some wealth to the shareholders. In terms of revenue guidance, they have given a 15% growth guidance for the next couple of years, and they are confident of maintaining the same range of margins going forward also. So one reason for the growth in the company which we have noticed is the China Plus One, which the world is looking at. So some orders from China to India are shifting, due to which this company is getting benefited in India as well as in the Middle East regions. And the capex plans which the company has are intact, and they will regularly continue to do capex in this year as well as the following one. Now, when you look at the valuations in the last trailing 12 months or the FY24, in terms of the profit, they are getting a multiple of somewhere around 25 now. But if you see the history, in the last 5 years, they've got an average multiple of just 11. So the re-rating of the stock has already happened now. And in terms of price to book, it is 3x, which is not so expensive. So the valuation re-rating has already happened in the company, and the further movement in the stock price will be more because of the growth in the revenue and profits of the company and less on account of the re-rating in terms of the earnings multiple. Now, what are the risks of investing in this company? Historically, in the last 5-10 years, the growth was not impressive, and the growth has come in the last 3-4 years only. So we have to see whether this is only a one-off move or the growth sustainably continues or not. That has to be keenly watched. And still, around 75% of the revenue still comes from the established products and not from the value-added products. So the value-added products range should go on increasing in the total revenue share, which is to be closely watched. Working capital point of view and debt management point of view, the company should not mess up. That's something which we have to see. So now, after understanding the business model of the company, the stock performance, the financials, the growth outlook, the risks involved, and also the valuations, what is the view on the stock? If you are a shareholder of this company, which you are holding from the lower levels, you should continue to hold because the results are good. The earnings multiple has re-rated, but still it is not that expensive. And if the performance continues, the stock can continue to rise. But if you are looking at a fresh entry, because of the recent rally in the stock, the risk reward is not much in our favor, because the growth guidance is just about 15% by the management. So unless some big opportunity opens in the new products which the company is developing, it is hard for the management to give a higher guidance from the existing range of products. So if you're looking at a fresh entry, then you should wait for the stock to cool off and then gradually build a position in this company. So that's our view on Time Technoplast. I hope you like the crisp video which we have made, covering only the important points we should know as investors. If you like it, hit the like button and do share with your friends. And if you want me to make videos on your favorite stocks, do mention the name in the comment section. Don't forget to join our Telegram channel using the link in the description button. Thank you for watching and have a wonderful day.